You're turning the microphone towards me. I'm taking that as a sign that you don't feel like talking.
I'm out, bro. I'm out.
You're not in this one, eh?
No, I am.
You are.
I'm here to kick it. Yeah.
Through the short 5-minute rehearsal period that we do have, or like last week where we just don't turn the microphone on
Yes.
and then get basically 10 minutes of rehearsal.
10 minutes in, yeah.
Yeah, you were stammering and stuttering a little bit.
I was, yeah.
You just woke up.
I did.
It's your birthday.
It is.
Happy birthday.
Thank you.
You're here to do podcast number 22
Yes.
with me
With you.
about the stock market. This is my birthday present to you, my friend.
Thank you. What a wonderful birthday present.
My presence is your birthday present.
Nice.
You're welcome. You're
Gift
welcome.
that keeps on giving.
How was your week besides the birthday? Obviously, the birthday is probably going really well. We stopped at Wendy's earlier.
Oh yeah.
And you
stuffed my face.
Yeah. Hence the afternoon nap while I did a bunch of research. Yeah.
Yes.
Go ahead. So, how was the rest of the week?
It was great. I have no complaints. Yeah, it was just one hell of a week.
Arm's getting better.
It's getting better. Mobility's getting better. Still a little tight, but besides that.
But we're grinding. In the gym, we're grinding every day.
Yes.
You're there every day. I see you there.
Thank you. Yeah, I am there. How was your week?
Good. It's good. We're finally starting to get a break in this weather. Oh, yes. Things are nice. We got a little bit more snow, but it seemed to clear up pretty quickly.
In like a day.
Made things a little ugly on Friday.
Right, yeah.
But overall, pretty good. Other than that, things are going pretty good. I'm having a tough time with the channel getting we deviated so much into so many different directions that I'm really having a tough time narrowing down where I kind of want to focus on. I'm having a bit of a conundrum. I don't want to keep spreading ourselves around so thin and covering so many topics.
Right.
Before we were so streamlined with just the news, and then I feel like we got into more of a investing type of a lifestyle channel as opposed to a podcast where we're covering not only practical ideas and tangible ways you can do things, but more like a psychological approach to how you go about investing and the way you have to just basically carry yourself and go through a whole bunch of things in life just in general, right? The whole practice of getting kind of better every day. And I found that just start spreading ourselves thin. So I'm having, as opposed to the week doing really well, I'm doing really well. I feel fantastic. I would like to get the channel a lot more streamlined. So rest assured, videos are coming. It's just a matter of trying to figure out exactly what I'm trying to say without giving people just too much.
Oh, for sure.
You know what I mean? Like, my ideal, obviously, is to start kind of on that baseline and cover so much, but I feel like I could almost deviate into so many other topics that I really would like to keep it more focused on making sure you're getting your money invested, and we're doing some of that other stuff as little side pieces and not stuff that's as featured or as highlighted. So I guess that's kind of what I'm saying, is that in the coming weeks, you can expect the channel to get a lot more back to focused on specifics about actually being invested and what it takes to be invested and stuff like that. So other than the week, doing fantastic. I would like to get more videos up.
Yeah, they're coming. They're coming.
They are coming, but I'm used to ripping her out at a faster pace.
For sure, yeah.
And when you're just kind of sitting there idle a little bit, like this doesn't take a lot of creativity, you know? Like it doesn't take me having you kind of got to be in the zone, the spontaneity that comes from things where you're really talking about a topic and you're exuberant. You don't want to give people a whole lot of blasé nothing. Then they don't want to hear anything.
Yeah.
With this, it's actively live news, so I can drum up all the interest because it's actually there. Because through the week, every time I read all of this stuff, it piqued my interest, and all of a sudden I find myself, like, ooh, I'm roused, and I want to find out exactly what's going on further. But when I'm talking about something that I learned in school 10 or 15 years ago, you really got to be in that mind space where you're, it's just because there's no audience, and so I'm working on that. The channel will be bringing more videos, and I will be bringing as much energy as I possibly can muster.
Bring the heat.
Bring the heat.
Exactly.
Honestly, I mean, it's summertime, right? And why the heck not? People want to see it. We want to make investing to be an interesting sort of adventure for people.
That's right, yes.
We don't want it to be boring, and I think the problem is most people stay away from it because it seems really daunting. It's got a lot of lingo and jargon that keeps people boxed out.
Oh, for sure,
And for the most part, it's really dry and boring, when how can billions of dollars be boring? Right?
For sure, exactly.
How about we do a podcast, though, after we're done ranting about...
Let's do this.
Yeah, podcast.
Who are you?
I am Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
You're looking pretty good, birthday boy.
Thank you.
You clean up well for a guy who slept away the afternoon here.
I feel lazy for doing that.
Revitalized is probably the word you're looking for.
A little bit, actually. I kind of think it made me a little bit more tired, because by the time I got home, ate the food, I was pretty pretty awake, pretty alert.
Yeah.
Then I dozed off, and then text message came, and I was like,
Had a little cat nap.
I want to go back to bed.
Yeah, you wanted to go back to bed.
It was
right?
one of those things, so I think the little cat nap was bad.
We are going to get deep into the markets here. So you are
So
not going to get a chance to go back to bed, my friend. Podcast number 22. The floor is yours. You're the host. Obviously, I'll sit back and listen to you explain this away, and maybe I'll have a little snooze.
So much to talk about. Where to start? Well, I guess let's start with the markets, like you said. It's been a bit of a roller coaster ride in the markets lately. And has this changed during like the past week or so? Like, what do we see?
No, none
really?
of this. No, of course not. I mean, okay. We came out of 2017, and this was it. This is what we expected. This is what everybody that's got any kind of logic expected, right? The market's going to look for any kind of reason to run things down from historical highs. We're at historical highs, and we set historical highs, repeating historical highs over and over and over again. In every index, it's to the point where things are so overbought. The price to earnings are so far out of historical ranges in every sector. It's impossible to imagine week over week that we're not going to have weeks of pullbacks like this. And the market looks for a catalyst to have that. The Dow Jones finished the week 23,533, down 5.67%, down 1,000 points over Thursday and Friday. And it's been down 11.6% since its high on January 26th. There's just, what are you going to do? There's got to be corrections.
Oh, definitely,
You can't expect all-time highs forever.
You could wish.
That would be excellent.
Of
but
course,
I mean, in reality, we're just not living in that, right?
No.
You made your money. If you were smart, you made a lot of money. You're sitting around a lot of tops that I would say there's a readjustment going on. No, you don't introduce new money into this right now. Not into this specifically. There's many investment vehicles you could go ahead and find a place to put your money.
Right.
But right now, the idea of getting relatively aggressive, especially in S&P 500 stuff. Like if you're talking 5% spec or whatever, you might be talking about something different, but you're talking about such a small portion of your portfolio allocation. That's not relevant for me to talk about. If we're talking about where you're putting your money right now, adding extra to the pool at the moment as opposed to taking earnings off the table or taking gains off the table, and you should have took them off maybe a bit ago, unless you're just going to ride this out and assume that we really do have support. And I think we do. Like, I really don't see the market pulling back. I see the support there, but you don't introduce new money. You just don't do it. We're at a real top fluctuation. S&P down 2,588 to close out the week, down 5.95%. And this is another big number, right? So all-time highs, all the time. We've been seeing them all through 2017. Everybody knew 52-week high, like every week, right? 2 out of the S&P 500 constituents had new 52-week highs. 2 of them only. 42 had new 52-week lows. Now, that doesn't mean they're egregiously dropping. It just means they were consistently going up, and then now we're getting pullbacks, and guys are falling 10%, 12% over the course of a month, and that 10, 12% is putting them to 52-week lows.
Right.
Because everything's been climbing. Every index, every sector, things have been going. And if they haven't been going, like we've looked at a few sectors that haven't been moving, but they're still like stagnant. Very few of anything have been pulling back. It has to be some egregious error on that company's part to be pulled back. Other than that, things have been going swimmingly. I mean, honestly, you look at the numbers, right? Swimmingly. Nasdaq finally back below 7,000. I think this 7,000 mark is a really good benchmark. We watched this number play around 7,000. We just broke 7,000 for the first time ever 3 months ago or whatever, right? Like assume that like it's supposed to just continue to, because we just broke 6 last year for the first time. You can't expect to just keep crushing things ridiculously. So like if it plays around 7, I think that's fine. Close the week 6,992 down. It was a down big number because we're talking 7,200 last week around there, right? Down 6.54%. So the Nasdaq took a wallop. The TSX 15,223 down 1.14%. So up here in Canada, pulled down. Financials were down. Industrial stuff was down. And those are obviously the big sectors up here already. They take up so much of the TSX that whenever all that stuff comes off a little bit, and there was big pullbacks, World Bank, TD, there was big pullbacks on a lot of companies, right? So markets overall, and we have catalysts again. We're going to get into the catalysts of why, but markets overall playing around in a range. I wouldn't introduce new money, but I mean, honestly, right? Like, you look at historically where things have been over the last, not only 18 months, but I mean, you could go 36 months. You could take this back to 2011 if you really want to. If you want to start counting in dividends and everything else, which is never accounted for when we're talking about actual indexes and the increases, they don't count dividends paid out and how much that was up as well percentage-wise, right? Like, but that does attribute to how much gains you're getting. Seriously, these markets have been ridiculous. You've been paid and paid and paid again. You are paid in the shade if you've been playing. If you've been playing S&P 500, just playing the index, you've been laughing for half a decade. You can't expect that we're not going to find a place that's a little chippy, where things get rocky. Right. You start hitting, you start hitting some tough patches and there's a little turbulence, but we will work our way through it.
Oh, for sure.
The economy's strong. These companies are strong, but the market's a little overbought. There's other investments out there, or cash on the sidelines for good opportunity isn't necessarily the worst thing in the world, as long as you're not sitting in 30, 40% cash. If you're sitting in if you're sitting in 20% cash, because you're just waiting for the right opportunity, I don't think necessarily it's the worst thing in the world. But right now, introduce new money. No, if you keep money in the market's stable enough that this is not going to be a trend where we're just going to fall off a cliff all of a sudden.
Let's hope not.
There's nothing that indicates bad news is like on the precipice. So
all right, well, that is really good to hear.
That's the news really you want, right? The big macro picture is that things are solid, bro.
Yes.
Like, pump your brakes on being too pessimistic. There's always going to be these things at the top. If you've seen this before, you know what it looks like.
Oh,
you know that this thing happens. But I mean, the market as a whole, everything that makes up the marketplace is doing phenomenal. So that's the only reason we're at the top that we're at.
That's
is
because,
and forecasts coming out of the Fed and everything else that we're going to get into later just push the numbers into 2019, 2020 that just show everything going in the right direction. GDP, employment, like things are gravy. It is a boss atmosphere to be living in right now.
Oh, for sure. It is, commodities had a bit of a bump this week. Why don't we dive a little bit further into that?
Yeah, gold was down to start the week, but gold finished almost 1350, 1349. So gold, not the worst hedge in the world. I mean, I could see gold if people are a little worried about the markets. I mean, sentiment and stuff like Bloomberg sentiment, that stuff. It hasn't changed much, and when it changes, it's not aggressive enough to make me think that people are changing their views. So gold still in the range we talked about. We said, 1350, 1325, somewhere in there seems really reasonable for gold. But gold, I mean, it's a decent hedge. It's not the hedge I would use, not at this price. I mean, if you got in gold a while ago, but not at this price. This seems like gold at kind of a stable price. The market's not bad enough to justify gold moving around too much higher than this. Oil 65.88. Price the pump's getting more expensive. We're paying like $1.20 a liter.
We are, yeah.
We got liters up here in Canada.
Yeah, not
for
gallons.
People who got gallons, we got liters. So $1.20 a liter up here, and we make oil, right?
Yeah, it's like in our backyard.
It's in our backyard for real, right? So oil up a little over 65.88. That to me starts to feel like it could push a new range.
Right.
That's a high price.
That is, yeah.
Like inventories and stuff there's nothing shook in the market, right? So it makes me leery that this isn't kind of just that top of but I would keep an eye on it. I mean, if we come out of next week and oil's 66 or 67, I would tell you that all bets are off again, and that I don't know. And then it looks like oil maybe could go 72, but as of right now, 65.88. That's out of the range I thought.
Right.
I thought oil 65 was about so I mean, I would keep an eye on it.
70's a little high.
The price is out there, and I mean, you know what time of year it is and all that kind of stuff.
That's right, yeah.
And we understand demand, but I mean, the volumes and everything are there. There's no. Yeah, oil's a tricky one.
It is.
It's such a tricky one. Like, it's impossible to really pin down how oil affects things on such a micro level from
very
that
true.
macro picture, right?
It's spread out so far.
It's just,
Everything,
yeah,
right? Everything uses it.
everybody has their fingers in it, and there's
Yeah.
so many controls, and in different areas it's legislated differently of OPEC, and you have all these different things that don't affect us but affect other people, and
That's
it just
right.
yeah, it affects the world as in oil. I mean we're looking at obviously WTI, we're not even looking at the Brent crude price, right? So but this WTI, so West Texas Intermediate 65, 88. Yeah, keep an eye on oil. It could move. If it goes up, I mean, oil, we could see it start to push that 70 number. That would be a stomp. I would believe that.
Oh.
I didn't think oil was ever going to get back up plus 70. So if it got up
right.
plus 70, because I mean, there's so many more ways to get oil out of the ground nowadays.
There is. There's
and
a lot of ways.
we don't assume that anybody's. We thought we were at peak oil a decade ago. More
Yeah.
than that, nobody
Oh,
assumes that we're at peak oil now. They think this stuff is just picking up, right? Like. So I'm not. Yeah, I'm totally. I'm hands off with the commodities, right? I'm not trading any futures contracts. So I'm totally hands off. We're covering commodities. I pay attention to oil on a regular basis, so I know kind of how it moves. This is a big move, but it's had some big moves through 2017.
Oh, it had.
It only got stable again recently as it pushed up through into the 60s, right? So let's see where it goes. Bitcoin 8,600. Basically, I mean, that's the other commodity, I guess, quote unquote, we're going to talk about. That market is up and down.
Well, speaking of Bitcoin, I read an article just actually before you picked me up on CNBC about the Twitter CEO.
Yeah, before I picked you up like I wooed you?
You wooed me.
Or I picked you up like in my car?
In your car.
Oh, okay.
Yeah, not to get you guys
Not
confused.
when I wooed
but
you.
Yeah, Twitter CEO said he thinks that Bitcoin would be the global currency in the future.
Well, Twitter got smashed this week. Twitter had a... Twitter's so tethered
to... that article just came out like an hour ago or something.
Oh, really? Yeah, well, Twitter's so tethered to social media that just a Facebook
Clickbait
story
baby,
in and of itself crushed Twitter pretty good, and Twitter's already not doing that well. I'm not listening to anybody who's way out of their realm of expertise give me their opinion on something without tangible reasons why. So right on that you believe something, because maybe you have an agenda to believe that. And when it's not as regulated as you talking about other companies or your own company, you might be able to get away with, jostling the marketplace, being a bigwig who actually has the ear of a lot of people. So I don't listen to a lot of people who tout the fantastic nature of cryptocurrency until people can start showing me how or where it's actually going to take hold.
Yeah, for sure.
Well, I mean, it's not a stable source of funds, right?
No.
Like it fluctuates far too much. And I don't see it being taken on by any specific economy, no government. It's not going to be adopted by a one world government. This isn't the Illuminati. I don't think the Freemasons are going to start.
I don't think so. I think they're doing quite well on their own already.
I think things are pretty stable, so it could definitely be some niche kind of a cultish underground something or other, I guess, maybe, but the idea that it's going to become the...
No, I don't think so. I think it's just a trend or a fad that's just going to eventually go away during the day.
People get really gassed up on a lot of stuff. They want things to be a certain way. They've read far too many sci-fi books. Yeah. Right? Yeah. It's just not... You need too many human hands in the monetary system. I go back to that all the time. That it takes human hands to correct the monetary system. So I'm not gonna start assuming that Jay Powell is not going to do a better job than a cryptocurrency is. I think the guys over at the Fed are going to figure things out in a much better and timely manner, and things that are more suited to drive an economy and steer an economy in directions through the ebbs and flows that are unpredictable, other unmanned currencies that might dominate the marketplace. We talked about this, how when you get no new currency added to the marketplace, you start talking about disparity in people who own currency, the 1%. I mean, what's going to stop that disparity from becoming even more and more severe until, if that currency ever took over and became the one world currency, it would almost doom a lot of the lower class to abject slavery, where you wouldn't be able to ever make your way out of that spot because all the currency is already in the system.
Exactly.
And it's all allocated to the 1%
Yeah.
because there's a currency cap on all this stuff.
Yeah, so how are you going to introduce new cap to the market, right?
Yeah,
You
or
can't.
else you break your whole ideal structure, right? If you start doing that,
Exactly.
then it totally
Just
defeats
crumbles.
what you're talking about,
Yep.
and then it's just regular currency, and then we've
Yes.
already got that in place,
Exactly.
right? Like, so you start amending the rules to suit a system that we already have, this archaic system you're trying to replace, but what you're doing is co-signing that archaic system, saying,
Yes.
you know what,
Yes.
we do need, and that's already in place, and it's doing just fine. Bitcoin 8600, the Twitter CEO, can go sit on it, Potsy. I'm not buying it. I'm not buying it, right?
yes.
Until I see Jamie Dimon and Lloyd Blankfein out there
Right.
telling me how that's what they're doing, then I'm not really buying it from social media experts
Right.
or anyone else.
No, exactly. Right.
Yeah.
So we already talked about the markets had a bit of a bad week. So let's talk about the catalyst which led to that.
Wow. So the way I hear this out in my head is on Sunday, live on pay-per-view, the United States and Donald Trump, its president, are going to take on the world. China and the world in a trade war in a steel cage in front of millions.
Billions.
Exactly, right? Like Michael Buffer's going to
Yeah.
do this. The markets are down again. The markets are down predominantly because we've reached a top. Any kind of news is going to ruffle the feathers of a market that's overinflated.
Of course.
Trade war, China, tariffs. Apparently, we're going to implement about $60 billion in tariffs on Chinese goods being imported into the United States. China has come out and declared about $3 billion in tariffs on a couple of things, fruits, wine, a few other American products that they bring in. Obviously, we bring in significantly more stuff from them than they bring in from us. China could scale back the purchasing of U.S. treasuries, and I think that's probably the only real major concern. They buy a lot of American debt, the Chinese, hence the reason that a lot of our debt is held by them, because they buy treasuries, they issue treasuries. That's obviously how they get money into the system. China has come out and said they're good friends, America, and they don't want it to get to that level, and it's not gonna. You know, that $60 billion of tariffs is only gonna touch a little under 10% of the goods that are imported from China. It's a very small amount. And I know people are focused on the China thing, but we're talking tariffs over and above a bunch of things when we start talking about steel tariffs and aluminum tariffs, but these tariffs to China are on a bunch of other products as well. Right, so these are over and above the steel and aluminum tariffs. These are tariffs on a bunch of electronics and stuff where intellectual property apparently was apparently picked up illegally. But the U.S. and China, President Xi, the guy who runs China, and President Trump, these guys like each other. Maybe they're not on the same page, but they got respect for how each other run a hustle, right? Like China's got a pretty good capitalist system over there. I mean, they're working out some kinks. They do have to do a few things. They have what we have up in Canada, where they have a lot of government intervention into companies. We see that up here, where companies get a lot of help from the government. So they get a lot of that over there, but it's helping them to build a really strong international economy. They do have some really huge companies coming out of China, the international darlings in the mainstream media, the Alibabas and stuff, not just these big industrial companies or companies that just work big manufacturing, but you've never actually heard of them before, right? So China's solid. There's going to be a little bit of this back and forth, but trade war, pay-per-view, it's not happening, right? The U.S. is not fighting the rest of the world. America needs to do this. You know what? If you got some intellectual property and were able to make some goods that you necessarily didn't do the R&D for, everywhere else it's being legislated properly and it's not there. Hey, if we're gonna do a trade deal, it needs to be on the up and up. I don't see anything wrong with that. The U.S. government is enforcing their trade laws on a bunch of different levels. We see that across the board. That's what's affecting the market on one level. Again, at a top. That's going to be the main thing. So these things are going to be the catalyst, going to be knocking things down. Breathe it out.
Right.
For real.
For
China,
for real.
U.S., we're going to be fine. Nothing's going to rock that boat. So we move over to U.S. steel and aluminum tariffs, obviously. 25% tariff on steel, 10% on aluminum. There's exemptions in place right now for Canada and Mexico. There's ongoing exemption talks,
Okay.
right? Because they're just doing this off the cuff. These aren't trade deals. They're just doing this off the cuff, implementing these tariffs, right? So there's too much importing of cheap steel and aluminum from other places, not using the stuff in-house, right? So Canada, Mexico already exempted from this. Canada and the U.S. have the biggest percentage to lose. Canada has the biggest percentage to lose
for sure,
by losing the United States deal, right? So then that exemption, that Canada-Mexico exemption, that's only till May 1st. That's only for like another month and a half.
Really?
Because they're trying to get NAFTA done, right? So apparently we heard out of Canadian representatives, out of Trudeau, and out of the U.S. representative that's doing the NAFTA thing, that they're a lot closer now to signing a deal. So Trump could reevaluate it on May 1st and extend it, but to be honest with you, I think he's kind of using it as a bit of a, no pun intended, a Trump card to go ahead and get that NAFTA deal done with the particulars a little more advantageous towards the United States, which is obviously what the U.S. was looking to do. Again,
for sure,
really cinch up that the trade. It's just not. It's been too much everyone else, not enough U.S. They've been doing too much giving, not enough taking. They're looking to even things out, and because they're the big boy on the block, people start looking at them like they're greedy. But the fact is they're only looking to even the playing field. It's not their fault or your fault that they're in a better standing than you are.
Right. Yeah.
You know, like, so they don't owe it to anybody else. They've been owing it to them anyways, without any with any due process for a long time now. Trump only now at this point is actually calling it to attention and saying, like, look, there needs to be an evening of the playing field. The U.S. continues to climb deficit, crossed 21 trillion, crossed 20 trillion 6 months ago. They clearly need in-house GDP, things to grow. America needs to grow. So, there's continuing talks of other exemptions that could take place. The EU, South Korea, Australia are currently in talks as well. You know what? The steel tariffs, all that stuff, I could see countries or the EU as a whole region getting, specific exemptions. Maybe you knock the steel tariff down to 15%, you knock the aluminum tariff down to 5 or 7. They work out some arrangements. Yeah. This is all to bring people to the bargaining table. This isn't to strong arm people. Like, you do have to do that. And America, I don't think they understand how lucky they are to have someone who's willing to sacrifice his own personal, standing in the eyes of people around the world.
Right.
To do what's right for America, to really stand up and go, like, I don't care. I don't care that you don't like me. I don't care that you think this porn star says whatever. I don't care. I'm focused on this, and we're going to get this done, and we're going to get it done my way, or I'm not going to play ball with you because I don't have to. I'm America.
Yeah, exactly.
And I think they've earned this spot, and I think the only way you can remain a world leader is to walk by example. This guy doesn't allow people's personal opinions of him dictate how he does his policy, and his policy is pretty steadfast to what he said. Like, you take a look at this stuff in the media that's been coming up the last couple of weeks. Did you see anything really from Trump that got him sidetracked? You got this U.S.-China trade, the tariff, the steel and aluminum tariff going on. You got this U.S. spending bill that he got finished on Friday. You've got all this stuff still being finished. He doesn't take he doesn't take media breaks. There's no big lull in the activity. This guy's getting things done. America will look back in time and realize that while the Obama administration handed off a good economy that was doing the right stuff, Trump really took that good economy and started saying, okay, you know what? The cards are in our favor. Let's start dictating a little bit instead of being dictated to. Right, just because everybody hates us already, let them hate us. We got to get ours. And they're doing that now, and I think kudos to President Trump.
Same here.
Absolutely. So there you go. Steel and aluminum tariffs around the world. China and U.S. tariffs for a whole bunch of goods being imported from China. The trade war. It'll be live on pay-per-view. 3 hours, 12 rounds. There's got to be a winner this time.
Well, it sounds like the U.S. government's been very busy recently. So let's go into some of the news coming out of D.C.
Spending bills. That's the thing, right? So that's the thing we were talking about. We had a government shutdown in January, a couple of government shutdowns. The spending bill was finally signed on Friday. Again, Trump digging in his heels, right? Okay, so this bill was done. Trump came out in the morning on Friday and said publicly he's thinking about vetoing the bill. He just came out and said he didn't like it. The bill just wasn't to where he wanted it to be. But like the U.S. government needed to get this signed. Like this is obviously setting the federal budget. This sets the federal budget now for the next 6 months. Again, like I said, 1.3 trillion. It needed to get done, and he said it's for the betterment of the country. But Paul Ryan actually had to go and talk to President Trump, from what I heard, and actually had to say, like, you got to let's get this done. We'll get it right the next. We'll get it right the next time. But he came out and was still just kind of adamant, like, you know what, you guys are just messing with the wrong dude. Like, if you think I'm just playing with you, and some of the stuff, and he came out and said, he told Congress he would never sign another bill like this. Now, it doesn't fully fund the Mexican border wall. Now, again, I'm not sure if that's not a talking point where he's just saying, like, you know what? I want to see you do what I say to do. I'm the commander in chief. Yes. I could veto this, not you, right? Yeah. So, like, I'm wondering if that's kind of not like just kind of the head fake where you're saying, like, I want to see you flinch. I want to see you give me that money so that I can go to Mexico and be like, you look, right? Israel did this to what was it, Egypt? And I'm pretty sure it's Egypt. I think Netanyahu told Trump when Trump took office, like it was the best thing Israel ever did. Like, because they were just having a lot of people that were, coming into their country, like, for sure. And it's, granted, it's very, very different. And I know there's a lot of bleeding hearts about everybody should, like, get their fair shake of whatever. And maybe that's very true, but it's not everybody else's burden to bear also.
No, it's not.
So, like, it's kind of a twofold thing. So I don't know if necessarily they're going to build a wall, but he wants that in there. And so this is a spending. This is the spending for the spending bill for the next 6 months. So 6 months down the road, we're going to see him pushing for this a lot more heavy. And he also wants a solution created for the deferred action for childhood arrivals. Now, this is a plan that was implemented before that he's had abolished now, but we still haven't had a solution as to how they're going to solve the people that are in the middle of it. So this is a program basically protecting some undocumented immigrants from deportation. So there's a gray area stuff.
For sure, yeah.
Now, he wants it figured out, right? Now, I don't know if he's not pushing, I don't think, any way or another, but he wants a solution, and I don't think the solution would be that every undocumented immigrant that's there is not available for deportation and is going to get basically grandfathered into being a U.S. citizen or into the process. So he's expecting some sort of resolution, you would imagine, where it's fair. Right, where you came in by certain means or whatever, and you're cool and whatever, we'll keep it. Right. But you decided to break whatever laws, and on top of that, you're here illegally, well, you're going to dip.
Exactly.
You know what I mean? So they're going to figure this out, he says, or he's not signing this next time. I love it. He came out, I'm going to veto this. But this has been months in the making now. We had government shutdowns. It needed to get signed. They did get raised defense spending, raised domestic spending. So they got a lot of stuff that he wanted, but he's pushy. And he's not playing. He's not playing with you.
No.
And he's telling Congress, like, next time we come to the negotiating table, this isn't up for debate. Like, I expect this to be done. I expect this Mexico border wall to be fully funded, and I expect the deferred action for childhood arrivals to be solved. Like, I expect this kind of stuff to be worked out, because I'm not going to be signing a budget into action if you're not going ahead with the stuff that I deem important as the president. Case in point, that's done. Drop the mic. Yeah. He's done telling you about it, right? Like, and if he don't play with China and he don't play with everybody else on steel and aluminum, what makes you think he's going to play with you?
Exactly. No,
right? He's worried about the betterment of America. I totally buy into it. Like,
me too.
I totally buy into it.
Yep.
I don't see what the guy's other agenda would be. He's already a billionaire. World domination just doesn't look like it appeals to him. When you hear about his personal life, it sounds like he's more into the ladies.
Exactly.
Doesn't sound like a world dominator to me, right?
Sounds like a good guy.
Sounds like someone who really is just an American, who really wants the best for America.
At heart, yeah.
And is really he's really aggressive about it, and he really puts a lot of the right people in his ear and allows smart people to permeate around him, and man, he gets stuff done. I like him. I love
Me too.
I mean,
too.
I've really, really enjoyed a lot of the presidents that have run the United States over the course of not only just me being an adult, but me even being a teenager.
Right.
I don't think guys like George W. Bush get near the kind of credit they should get for the actual politicians that they were, the work that they did, the things they went through during political office. They kind of get laughed at now.
Yeah,
but I think Trump, probably the best so far.
I would have
a
to
year,
say
a year
so.
in.
I like Trump.
A year in. Poof. This is better than Clinton playing a saxophone.
Oh, for sure.
Right?
Yeah.
Like, yeah, this is I'm all on board because maybe the wheels will come off. Maybe this is all a ruse, and like we'll all get shown in the end by the people who are the detractors to begin with. But I've got a sneaking suspicion that this President Trump is going to do 7 more years, health permitting and his willingness permitting, but I think he probably wants to do it.
I'm on your side about that, yeah.
Health permitting.
Another 7
He's
years.
already in his 70s, right?
Yeah.
But
and he's crushing it.
He's crushing it.
For 70 years old?
Dude, he's not to be played with.
He's getting stuff done.
I'm telling you.
Yeah. And the Fed met this week.
The Fed did, right?
They did.
First time Jay Powell gets a chance to raise the interest rates over at the Federal Reserve. 25 basis points. We're playing in that 1.5 to 1.75 range. Now, this is the 4th interest rate hike in 12 months. We've obviously got a couple more we're expecting for the balance of 2018. I think everybody understands that interest rates are just going to be going up. Things are doing well, but all the forecasting out of the Fed was solid. So the market started to take a little bit of a hiccup when all this news started to come out middle of the week, but I don't know why, because all the news is solid, right? So GDP estimates, 2.7% for this year, 2.5% previous, 2.4% estimate for 2019. Unemployment's estimated to fall to 3.6% down in 2019 versus a 3.9% estimate previously. So unemployment expected to continue to fall. Historical lows is that what that would be, right? Core inflation estimate of 1.9% for this year, 2.1% for next year. So that inflation number still, they're looking for around 2. That inflation number is definitely, and core inflation obviously not accounting like gasoline and stuff, more of the volatile stuff. But still, they're looking for that number to get a little bit higher. But the economy is doing so well. 3.6% unemployment. If it gets to that,
when you think about that, that's pretty impressive.
You are living in almost a utopia. If you are somewhat educated,
just about everybody's working.
You could go out and get yourself a really well-paying upper class, middle class job.
Yeah,
right. Upper middle class. You could go out and do well, purchase a home. You could do so well right now that if the economy stays like this, we could see the reintroduction of the middle class. The only problem I have with that, and I guess we'll get off, we talked about this, about the videos, where I do videos on just kind of things I see as more of a sociology thing. My issue with more money being added back to a lot of people is people spend a lot of money.
People can't say no to themselves.
Yeah, people seem like they believe they're entitled to a whole lot more than they are, and they rack up debt.
For sure.
And I don't think in a generation, well, many generations previous to this, when a middle class was an actual sustainable sort of thing for a long period of time, people had that same mentality, the keep up with the Joneses mentality.
Right.
And I think nowadays we've kind of painted ourselves into a corner a little bit because we've raised a bunch of pompous, needy people who get self-gratified by spending money all the time. And I wonder if unemployment at this level and opportunity at this level won't maybe be squandered by you just going out and purchasing the more expensive Audi not reinvesting into your retirement.
Yeah.
And by doing that and not giving the money back to the system, you would then stabilize and create a foundation for a next generation of strong middle class, even if that employment number was to go up.
Yeah.
Do you know what I mean?
I do, yeah.
But because we're not going to do that, because we're going to spend it.
Oh, of course we are.
It's maybe not going to be the same long term that it is in the short term, but in the short term, 3.6% as an estimate for unemployment is unbelievable.
Yeah.
Where we are in Canada in the 4s is strong.
That's right, yeah.
3.6 is nuts.
Yeah.
But But how many people? Yeah, you got to have that Audi.
Yeah.
Beamers all around.
Exactly.
Right.
Yeah.
Honestly.
On me.
Yeah.
All around.
Beamers all around.
Yeah.
Right? When the money's flowing, I mean, people spend it.
People get stupid when they got
You
money,
see how
right?
much money is out there in debt per dollar of household income. I mean,
Yeah.
it's at a record high. U.S., Canada.
Yeah.
I mean, we don't have the defaults right now for a lot of lending, but it's because we're at a top. Things are gravy.
Right.
We've got years in the bank now where things have been doing well enough, but as interest rates and everything start to change and people start calling in debts and things have to be refinanced, you could find that things could topple a little quick. I would love it if everybody was, but of course they don't even teach you money in school.
No, they don't.
They don't want to do that, right? They don't want to get you hip to it.
No,
they just, it's just like this foreign, I guess you can't, they even tell you, like if you can't do it, you teach it or whatever. Isn't that kind of like the slight that they give to educators?
Yep.
So like even then you're telling me like they can't do it or teach it. They're like that inept that there's just no process to teach a 14-year-old the beauty of compound interest and saving money today and what it ends up being tomorrow.
Maybe that's something that we should, us as Canada or US should implement in their schools. Which
Of course.
Like in elementary.
Oh my God. Have you not
teaching.
ever heard everybody say that? I've heard everybody ever, like, oh, they never taught me what to do with money in school.
Right.
Nobody taught me how to do this. It's like,
I don't know why they overlook that, because it's kind of what keeps you alive and keeps your economy and everything going, right? It's money. Money
Yeah.
makes the world turn.
Yeah.
Why wouldn't you teach that in school, right?
I don't know. It seems like a weird sort of a thing.
It does. As you mentioned that, I'm thinking about that. I'm like, that is really weird that they don't actually teach you.
Well, yeah, like economics
Nothing.
economics and like just like simple things like interest.
Yeah.
Like that's a quick little. You think you'd take a couple of days every month and just remind people that like being prudent about your finances makes things so much easier exponentially over time that you become so self-sufficient from passive income streams and stuff.
Imagine the debt would drop so much if you knew how to like invest your money or save your money or whatever.
People just aren't they're not awake to it. Nobody's concerned enough with it. There's new iPhones to talk about, Anthony.
That's right.
There's a new iPhone.
New PlayStations
Don't
or whatever.
remind me that I'm supposed to save my money.
Yeah. Don't.
No,
That's
those things
bad.
are selling
You
well.
want to spend your money.
PlayStations are selling well.
Obey.
Yeah.
Yes, they
PlayStations are selling well. iPhones. There's a new iPhone apparently coming out. I don't have this in the news, so I'll just tell you. Since we talked about it, there's a new iPhone coming out, an X, that they're going to be coming out with. That's a new production run. That's apparently about 10% cheaper.
Oh, really?
Yeah, it's for them to make. Like
Like kind of like cost or whatever.
They're working on a bunch of different stuff. Analysts have them having a flexible, like roll-up phone available by 2020. I know we talked about Samsung working on that too, right?
That's pretty crazy.
PlayStation 4, highest selling console in February.
That's right,
for gaming. Yeah, hardware up crazy for the gaming numbers. We're going to get into that.
Yeah,
People spending the money.
Oh yeah,
they're doing well.
I love spending money.
Oh man, but you got to have all that flashy stuff.
You do,
right?
Yeah.
I mean, honestly,
honestly, you don't want to learn about money. You'd rather play video games.
Yeah,
right?
Carry on.
Before we wrap up the markets, was there anything else you want to talk about in the market news?
How about inflation in Canada? 2.2% in February. That's the highest in 3 years. That's in relation to 1.7% in January. Core inflation, which excludes volatile items like we talked about, which is like gas and stuff, climbed to the highest levels since February of 2012. So with inflation starting to go up, we need a little bit of an adjustment. And the way that you adjust prices is by having your interest rates go up. So the Bank of Canada is probably going to be rate hiking maybe a little sooner than later.
Yeah.
Maybe that dovish tone.
Didn't one just go up here not long ago?
Yeah, we just had one not long ago, but I mean, like,
it's coming again.
Got to expedite it a little bit, right?
Yeah.
If you see inflation jumping that much just from month to month, right? We're talking 1.7 to 2.2. It's a pretty good jump in inflation.
Oh yeah.
Yeah. So I mean, Mark, things are getting a little hot. You got to temper it a little bit.
It's getting hot in here.
Yeah. Don't do that again.
No.
There'll be no singing or dancing out of you, sir.
I know.
Not about inflation. Not about inflation. I don't find that a singing or dancing topic at all.
No, I know.
No.
Shame on me.
For shame on you. How do
Anthony.
you sleep at night, sir? You sleep in the afternoon.
Of course.
Yeah. So yeah, inflation up in Canada in February. MBA mortgage apps down in the States. Composite index down 1.1% versus 0.9% week over week. Purchase index up 1% versus 3% last week. Refinance down 5% versus down 2% last week. And that's with the 30-year going down, but it went down nominally 4.68 versus 4.69. So we're off that top, but only by 0.01% as the 30-year continues to go up. Because, rates for everything are going up. Everything up. When things are good, you're going to have to pay. Everybody's got to pay.
Everybody got to pay the piper.
Got to pay. Everybody's got a price for the $1 Million Man. February existing home sales up 3% to 5.54 million. January housing price index up 0.8% versus a 0.4% estimate. So January housing price is up pretty good. Jobless claims, initial jobless claims up 3,000 at 229,000, but continuous claims took a big hit, down 57,000, beat the estimates. That sits at 1.828 million, so up only 3,000 on the initial claims, but down 57,000 on continuous claims. Like the Fed said, the unemployment is going to continue to get lower and lower and lower, and things seem to be playing to the exact tune that's being sung out of the Fed. Things are well. Things are well with the markets. Do not let weeks like this fool you. Don't let trade war talk and a bunch of hullabaloo get you all tizzied up. This is if you haven't been playing the home game with us the whole time, you don't know what's going on, and you don't realize that at a top things are choppy.
Yeah, exactly.
That's basically what's up.
Oh yeah.
Like you look at it even through the earnings. Like again this week earnings, there were a lot of companies other than like one that had decent earnings. They weren't blowing it out of the water, but they were decent, and most of them were all down.
Yeah.
Because,
when you're up, sometimes you must come down.
Yeah, something's got to come down,
Exactly.
right? And unfortunately, everybody kind of all went up at once, so everybody takes a bit of a correction all at once.
That's what it looked
You
like.
made your money. You made
Exactly.
your
Why are you complaining?
How greedy can you be?
If you're already in the market, you should know this happened.
Yeah, you made your money.
Exactly.
Right? You didn't just turn this on yesterday.
No, you did not. So I guess that wraps up the markets.
That is the market.
Let's move on to some headlines.
Go for it.
There are a good couple headlines. So everybody knows Dropbox, cloud-based service, debuts this week on the Nasdaq.
Shares closed at $28.42. They opened at 29. They were up as high as I think 31 something. That's up 35% in their first day of trading because the IPO'd at $21. They announced that on Thursday. I think they were thinking about IPOing at 20. They are the first big tech IPO since Snap last March. So it's been a bit of a lull. We've been looking for big tech to really take off.
Right, yep.
Right? And we just haven't had it. But this is definitely going to give Spotify a bit of heat coming into their IPO, which is expected the 3rd of April on the New York Stock Exchange. Revenue for Dropbox, $1.11 billion in 2017. They've never turned a profit. They're 11 years old, based out of San Francisco. Their net loss was nearly cut in half, though, from 2016 to 2017 to $200 million. So they definitely are doing things in the right direction.
Sounds like, yeah.
Yeah, this is another one of those big competing companies in that cloud-based stuff. We've got everybody, Microsoft, Google, Amazon. It is busy in the cloud. And we're talking Oracle. And I mean, it is busy in the cloud-based service. Dropbox is looking to make some headway. Big tech IPO. I like that. I like that. That's interesting. The market likes that, as you could tell by the price. I mean, it came out of the box running.
I'm Dropbox on my phone. I've never really used it. Maybe I should try that.
Yeah, we use Google Drive.
We do, yes.
Yeah, we use Google Drive. Dropbox. Well, it's a tough marketplace to crack. I know they got a lot of users and stuff like that, but you start looking at a lot of these cloud software companies and how fast they're growing and the amount of exclusive contracts they're signing with big corporations. And I wonder if Dropbox maybe isn't kind of going for crumbs. Yeah. Maybe.
Because you guys like the two big heavy hitters would be like Microsoft and Amazon, I would say.
Amazon's web service, definitely. Right? Way out in front. Yeah. Absolutely. Yeah. But like, I don't know. I wouldn't get it. Again, I'm a best of breed guy. So when I look at this, I think of who the people are around them, that surround them, that are competition. Yeah. And it's a lot of really well-known names that have a lot more money and pull and have a lot more pipelines to people's ears than Dropbox does.
Yeah,
As
yeah.
much hype as Dropbox might have, or as much backing as it might have, and as good as it is for the marketplace, it's cool.
Oh, yeah,
cool
for
to
sure.
have big tech go live, right? To be up for sale, but this is, yeah, they're playing with the big boys here.
Oh, they definitely are.
Welcome
They're swimming with the sharks.
Welcome to the market, Dropbox.
Yes.
Let's revisit where they are 12 or 18 months from now.
Yeah,
I'm not an IPO player.
No.
No, I'm not somebody who goes out and gets the prospectus and jumps in on something before it's. I like to see some quarters. Let me see where you're at.
Let me see if you're sticking around first.
Yeah. Let me see a little bit. There's a lot of stuff goes IPO and never. I'm sure we've had some great IPOs. I've missed out on great stuff by not being. But I just like to look at a bit of a body of work. I know you get a glimpse into the company beforehand. The prospectus allows you a little bit of a look, but it's nice to see a much more robust track record over the course of 6-8 quarters.
Oh, for sure,
you, and then sometimes you miss the boat. Sometimes things like Apple or Facebook rather are well gone. By that point, but such is life.
It's a hit and miss, right?
Such is life. You can't win them all.
No,
that's not what you're trying to do here. Right?
No. So our next headline kind of affects all of us. There was a data breach on Facebook.
Yeah, so a British company that does a bunch of analytics called Cambridge Analytica. They got a bunch of data from Facebook from 50 million users that didn't give the consent. Now, they're working with Facebook or work on Facebook and have access to this data. Some pretty serious stuff. Facebook lost 40 billion in market cap, went from the 180s recently down to the 160s. It could be pretty serious. 2 people from outside Cambridge Analytica also being audited in this, as Cambridge Analytica is coming under a lot of fire. So is Facebook, including the creator of a personality profile app. So again, it's a lot of people's private information is basically being sold out there on the marketplace, being used to, create packets of data that help to, sell you products or create personality profiles, much like this app where it's trying to take your behavior patterns and use those behavior patterns and put them into some sort of algorithm to, pitch to you something.
Yeah, that's why you get those suggested ads.
It's right? So, and the problem is as the week went on, Facebook took a big hit from this. Cambridge Analytica, obviously under quite a bit of scrutiny. Yeah, good word for that. And that's the word I was going with because I know what I'm talking about over here. Thanks for butting in. They're under a lot of scrutiny, but Facebook ended up becoming under a lot of scrutiny because obviously they're publicly traded. They're working with this company in a couple of ways. Not in the way that obviously they went ahead and took the 50 million users' information without consent.
That's a lot.
Yeah, but the problem is the FCC now, as the week went on, started looking into Facebook, and they say knowledge that Facebook might have of some of that sensitive data being transferred from Facebook to Cambridge Analytica could be illegal. And if it was illegal, because the data was breached by 50 million people, the fines for that data being exchanged, if Facebook knew about it, could be thousands of dollars a day per user, adding up to over $2 trillion in potential. If there was, if they made grievous errors here and were nefarious means on Facebook's part was giving your data away, and they were found out by Cambridge Analytica being found out, and now, as the dominoes fall, we find out that Facebook could have been, the FCC's looking into it, could have been sharing information they shouldn't have been. $2 trillion. Could be a lot of fines. Yeah. There's a campaign of, what is it, leave Facebook or quit Facebook?
Something like that, I heard about that.
Yeah, I saw Elon Musk and a bunch of people involved, like tweeting this out or whatever it happens to be, which is, so it's putting Facebook in a really negative light in the mainstream media, that's for sure. But
50 million users, right?
I don't know if people are that scandalous. Are they? Are they really over there at Facebook just trying to hoop you? Like, what are they getting out of giving this information to this Cambridge Analytica? Like, wouldn't there be some sort of paper trail to show that was relevant? Like, why would you take a risk, a $2 trillion potential risk in fines?
That's very
true. To trade information. Like, I think that this is isolated to a company getting access through whatever access they gained it from, and were supposed to, much like the rest of us, read the terms and services of their contract,
Right,
which
yeah.
meant don't use this information for anything but what you've been contracted to do with it. If anything, maybe it's just there by proxy because of something else you're doing. And they went ahead probably on their own as a Trojan, as a rogue agent,
Yes.
and did this. And I don't think Facebook, is in on this. So I think the FCC part will come out and show, but took a big hit, market cap hit, big time, and a lot of news. And people apparently really want other people to leave Facebook.
Apparently, yeah.
Yeah, I like Facebook.
I do too.
I use Instagram lots.
Every
Shout
day.
out to Zuckerberg. Yeah, I like Facebook.
Black Panther has been breaking box office records.
It became the biggest domestic. This is now a lot of stuff. It's specifics.
Right.
The biggest domestic superhero grossing film of all time. Grossing superhero film of all time. Whatever. So biggest superhero film of all time.
All time.
Grossing domestically.
Domestic. Okay.
So beat the Avengers. It's 5th all-time domestically ever. So it got 623.4 million so far. Do you wanna take a guess at what the other 4 highest grossing domestic films of all time are? This is number 5 all time, but number 1 for superhero films. So number 5 all time currently. What are the 4? Come on. Think of the big grossing films.
Big grossing superhero films?
No.
Film?
It's number 1 now, superhero chief.
Right, okay.
You got to start paying attention to this.
No, yeah.
It's number 5 all time domestic gross in the U.S. So what were the 4 that made more? 4 movies that made more.
I can't think. I don't really watch movies.
Avatar, Titanic, The Force Awakens, and Jurassic World. You ruined the bit.
My bad.
You ruined this bit. How do you sleep at night? If it wasn't your birthday,
No, I just I don't really follow the movies too much.
You knew those. I could see it in your eyes. deep in your eyes. Yeah, you've seen all 4 of those movies.
Definitely have.
You have. How did you not know Avatar? That's the highest grossing film of all time.
Yeah,
you just said it.
You
just said it.
I know.
I knew you knew this.
Having a bit of an off day.
You are.
I am.
It's your birthday. You're hopped up on Wendy's.
I am.
You crushed so much Wendy's.
I'm just zinging on carbs right now.
I would imagine, right?
Yeah.
Woo!
Woo is right. So this is interesting. Elon Musk to make $2.6 billion. How can this be?
Okay, so Elon Musk was granted $2.6 billion in stock options over the next 10 years. Shareholders voted this in as a stock option plan that's going to pay Musk. They ignored major proxy advisors in the voting of the compensation package. This is kind of a surprise to a lot of people. Now, obviously, there are a bunch of incentives that he's got to hit to actually get $2.6 billion over the next 10 years.
Yeah, they're not just giving it to him, right?
No, but there's a lot of stuff he has to do. But still, it's putting a lot on his plate, and it's definitely, I would imagine it's incentivizing to him, right?
Oh, I imagine.
But has he not been working as hard as he possibly could already? I'd like to think
how can he turn it up even more?
Yeah, so, Tesla's having a lot of problems, so this is a bit of news, but again, it kind of has a bit of backlash because the company has been riddled with, underperforming on their production and delivery schedules. They've been having some issues as far as actual parts being built and the amount of time it's been taking. We've been hearing that parts are being built like individually by hand and stuff like that, and some of the actual Tesla plants. And all the information that we're getting from Tesla has been really received poorly, as you can tell by their stock price recently. And now even though he's not being paid 2.6 in cash, right? This isn't like...
But still, stock options, though.
But he's got to hit a bunch of incentives,
yes,
right?
He does.
So, I don't know. He doesn't make any money, does he? He doesn't make anything there, I don't think.
I'm not too sure.
I don't think he gets paid. I'm pretty sure he's on that zero salary CEO thing. I don't think he makes... anything. I'm pretty sure he's just eating it right now, right? He's balling. I'm pretty sure he's just... So I think this is more just because he owns a bunch of Teslas. So, I mean, his net worth continues to go out. Like, Tesla's been on a run for as long as it's been public. I mean, this year it's had a bit of a trip up, especially in the last 6 months, because all the publicity has been negative for them, right? Like, they've just been missing.
Lately, yes.
They've been missing things on a bunch of different levels, but this again is just compounds on the bad publicity.
Yes,
Unfortunately, because this guy, I like Elon Musk. He's a real entrepreneur, a capitalist to the truest sense of the word.
Straight up, yeah.
So it kind of,
he's an interesting character too.
seems like a guy who's got a pretty interesting head on his shoulders.
Oh, for sure. I like to pick his brain, just to sit there and like talk to him.
Yeah, a lot of the stuff that he's into is not really stuff I'm specifically into. Just the circles, I guess, that he moves in. I know you're into the space stuff a little bit more, but none of it really moves me. But his entrepreneurial spirit, the fact that he just digs in and goes all out and makes no excuses, and he's just a true capitalist entrepreneur, and he's one of those people that will be influential through his teachings, through his speaking, through his actions, through generations from now.
Oh, for sure.
He's already 40 years old, made an indelible mark on society. Yeah. I would imagine he will only continue to do more of the same. So getting paid $2.6 billion potentially in stock options, we'll see how that pans out over the next decade.
Yeah, we're gonna have to keep keeping a watch.
Yeah, we'll keep an eye on it. I promise. When we're here for episode 1500, we'll let you know exactly how many of those 2.6 options he actually ended up banking.
Was there any other headlines you'd like to talk about?
Apple is investing in micro LED screens, sending screen suppliers on Monday down pretty sharply. Samsung, Sharp, LG Display all took a big hit as Apple starts producing some of their own screens here in the future. Obviously, they haven't started that yet, but they have been investing in the manufacturing side of it. So we will see Apple starting to, like we said, cut the cost of the iPhone X coming up here shortly, cutting their costs. And then on top of that, getting into the micro LED screen supply side of things and really knocking out the suppliers. As we know, that slows things down.
It does.
It really is a bottleneck for them getting things to market. So this is going to help them definitely because they can be ahead of schedule considerably, you'd imagine, because they can start making things for themselves without having to worry about anybody else putting themselves first. I mean, that's definitely the problem when they use Samsung.
Right.
Because Samsung needs the exact same LED screens, so you end up fighting for the same little bit. And obviously, Samsung's going to cater to themselves first.
Oh, for sure. Why would they?
Because they're selling the phone too. Yeah. If it was just making the screen, it'd be different. But they're making the phone too. So AT&T, Time Warner, Department of Justice finally went to court. It's court time. Somebody got the death penalty. No, that never happened. Admissible evidence on Monday was all the talk. What evidence can we have? Who's going to speak? We're going to call this person. We're going to call that person. The Department of Justice, they had all sorts of mystery people that were going to come and testify, and it was going to be very cloak and dagger.
Yeah.
And they wanted a whole bunch of things that were... They wanted a bunch of stuff added into it that AT&T and Time Warner said, like, this is pretty unreasonable, right? So they delayed the opening arguments because of a snowstorm on Wednesday. Then on Thursday, the executives expected to testify in this. Guys from Cox Cable, Comcast, NBC, Charter, YouTube, CenturyLink, from Sony. But the problem is, and the judge even said this nearing the end of the week, there's no precedence that's been set in this case. There's no reason to believe that this is bad. And there's a lack of proof for any future potential competitive harm, which basically is going to make whatever any of these other guys say pretty null and void. Like, a lot of these guys, they're going to talk about how the fact that it's not a fair competitive playing field because maybe they don't have the ability to go out and do what AT&T and Time Warner are trying to do. But when we've broke it down, and we've broke it down on this show before, the actual amount of market share either one of them is consuming from the other is still so spread out. You can't say that they're creating any kind of monopoly or duopoly at the top of any of the telecom or media or anything business. There just is still too much to go around. AT&T and Time Warner, while very much in the same boat, because AT&T does have some media properties, when they get together, they still do not cover near the amount that I would say puts them at a competitive advantage just by the amount they own. They're not going to be able to box out consumers. We've heard that they've already said they're going to make any concession that needs to be made in regards to that, save for selling some of the properties that they want. They really want CNN. They really want some of this stuff they're not willing to maneuver on. But some things, like coming up with arrangements on when they're the only provider in a marketplace, or one of the only providers in a marketplace, of not basically price fixing things, of making sure things are still as reasonable as they are in a marketplace filled with competition. That seems reasonable enough to me. These two sectors are being merged, like we've said on the S&P, media, telecom. It's a natural convergence of the two. I think this is going to go through. I think it's supposed to go through. Neither of them hold big enough market share in either or of the sectors to really say that it shouldn't. I think the judge feels the same way. Bunch of guys going to get on the stand from other competing companies, and they're going to bemoan it, but tough. At the end of it, AT&T, Time Warner, $85 billion, probably going to get done.
Yeah, probably going
to get done. Video game sales in February up 23% year over year, 995 million in sales versus 811 million in sales last year. Video games doing just fine. This was the best January in 7 years, and on top of that, with the February, it brings year-to-date sales for video games up 39% to 2.1 billion already. 2.1 billion though still sounds like such a small market. When you talk about it, you think 2.1 only in 2 months? I mean, this market has a long way to go. I was playing a video game on my phone earlier.
Yeah,
You know what I mean? Like, it's just one of those things. It becomes easier and easier to pick up, and they're everywhere. I don't know.
For sure, yeah.
I'm never going to be surprised as video game sales become the ultimate in entertainment. And there's nothing that even comes close to it, right?
Definitely went down that path.
The interactiveness of it is just so immersive and becoming more and more and connective to everywhere in the world, and everything is real time. And it's just to assume that this isn't going to be the predominant entertainment force in the future.
For sure.
I think is ridiculous on my part. I don't see it going any other way as media, like the news or TV or film or even streaming and stuff become. I mean, we see cloud-based gaming platforms. I'm going to talk, and we're getting into that. We'll talk about that here in a second here, actually. So hardware sales up 55% on the month. The Switch and the Xbox One selling really good, but the PS4 still selling the best. Software flat, accessories up 35%. So even on a month where software, the actual games, weren't there, they were flat. The growth, 23% growth in the actual market space itself. When software is flat, what does that tell you? That tells me that these gamers out there have money allocated every month that they're going to spend on video games. And in a month where there is no new video game, or maybe you've had a 2 or 3 month window where there hasn't really been a game you wanted to spend $70 on. Maybe you made some microtransactions and stuff because you're a gamer every day. But you didn't go out and buy a bunch of new games. You find a month like this, again, software flat. Where do we see the sales? Hardware. The stuff that's the most expensive. 55%. You know why? Because a gamer after a few months would say, there's nothing to play. Maybe I'll pick up the other system. Because there's a lot of proprietary stuff on the other system that's supposed to be really good. My homie plays this. Why don't I pick this up? Try some of their branded games that are only on that system, because this money is allocated already. These people are entrenched in the atmosphere. I don't want to call it an addiction. It's just their hobby. And that money is there. And on months when even software sales are flat, hardware sales find a way to come shining through. I guess we'll move on to the other story about this. What were we talking about? Video game sales as a whole. I don't remember what the story was. I had a good one about this, about video. The Amazon started Game On, a cloud-based gaming service. So Microsoft did this last week. Do you remember? We talked about how Microsoft signed up Ubisoft. Now Amazon started this following week, because of the competition, obviously, in the cloud space, like we just said, Amazon and Microsoft, right? They started Game On, which, again, another cloud-based gaming service. They purchased an online gaming service. I can't think of the name of the company. Kind of small company. About a year ago. They didn't spend, it was $150 million or something on it, but obviously going to be integrating a lot of that software into this platform if they haven't already. There was no word on when this was actually going to go live, if they've signed any publishers or game developers to be exclusive onto this service, or how it's going to work. But they did say that when people are on there, it's going to allow people to set up competitions. So you can have, me and you could set up a game where you're playing a game and I'm playing a game, and like our friends are playing, and it shows like leaderboards, and we set up like challenges and stuff. And you can have where like when people so you set like a community where like maybe you get 1,000 people in the community and people contribute. You can then use like points you earn to like have people in the community win stuff off of Amazon.
Oh, that's cool.
So like Amazon's integrating it like a prize system into the So the competitive space in gaming continues to grow. Obviously, like we said, Microsoft gaming last week in the cloud space, Amazon this week. It's only a matter of time till all the other companies that are in the cloud space, Dropbox.
That's the next one, bro.
Alphabet, these guys, Oracle, they'll all be in on this in a short period of time because gaming, the market share in gaming continues to grow. Rolls-Royce. Do you know how long it takes to build a Rolls-Royce?
Well, I'm thinking probably a couple months.
It takes 13 hours to build a Toyota. It takes 6 months to build a Rolls-Royce. Did you know that?
By hand.
By hand. They're having a tough time. Engines. They make engines for planes. We know
do.
General Electric has a plane that's in testing right now for Boeing, for the big stuff, the big, heavy 787. Rolls-Royce also makes a plane for the 787. It is not doing well at all. This Rolls-Royce plane is having some technical issues. Not a good sign for Rolls-Royce, right? Boeing 787 wide body, and it's also giving Airbus's top end of the line, A330neo, some issues. So Rolls-Royce on both ends, both big aircraft manufacturers using the Rolls-Royce engine. That's the number one go-to engine for aircraft manufacturing. Having some troubles, man. Not looking good. Technical issues in engines for planes up in the sky.
You do not want that.
You don't want to,
We always joke about fuselages falling on us.
Dreamliner sounds more like a nightmare liner. With one of the, I'm concerned. Rolls-Royce, they're going to get it together.
Oh, I'm sure
they're going to figure this out, right? So, but as of right now, issues. Boeing has a deal in line with American Airlines, 787 Dreamliners. It doesn't say how many. American Airlines was working on a deal with Airbus for the A330s, which are obviously the high-end Airbuses, but Airbus wouldn't match the deal that Boeing was going to give American Airlines. So you can expect in the coming days, probably sometime early next week, an announcement of American Airlines purchasing X number of Dreamliners from Boeing with X number of potential Dreamliners to be purchased in the future. Add that into Boeing's backlog of $40 billion or whatever. And American Airlines can be sure to get their Dreamliners in 2050.
Boeing just cleaning up the market.
Yeah.
Just taking business from everybody.
Oh, yeah. From Airbus.
From Airbus.
From Airbus. Not from everybody.
Well,
just destroying it. Like, what was the Hawaii Air? Was that last one? They signed that big show, the big contract at the Dubai Air Show. Like, they've been crushing it, right? Airbus has announced, even though Airbus sold more planes last year than Boeing did overall, and Boeing sold a lot, Airbus has not had a great announcement recently. We haven't had an Airbus wow announcement.
Yeah,
right. They got the deal with Bombardier. That was kind of the thing, right? Taking that C Series plane
quite some time ago.
Yeah, and I mean the Delta thing. That's about really what we've seen so far. There just hasn't been enough. Airbus just hasn't done anything to wow. That's the reason why Boeing's been dominating.
That's why, yeah.
Right? They've been running the Dow for a year. They took off. It's an exponential growth over at Boeing and shows no signs of declining because they're cocky. Those guys know they're number one. They'll let you know. You look at some of their press releases and it's like, it's a lot of
dropping the mic.
Very snarky at Boeing. Uber has an autonomous vehicle program. Well, they did until a lady on a bike in Arizona got killed by one of them, and now they don't have an autonomous vehicle program. I heard about that. Autonomous vehicles still need more work.
Definitely
haven't worked all the kinks out.
Yes.
No Rolls-Royce engines were harmed in the making of it.
I just rack it up to gremlins.
It's something.
Yeah.
It's definitely not positive. It doesn't bode well for cyclists in Arizona and elsewhere. So that's terrible.
That's
terrible
and
news.
Terrifying.
And so Uber suspends the program. So does Toyota. Toyota suspended their autonomous vehicle program because of this. Because they said they just don't want any of their actual, like the autonomous vehicle operators, to feel nervous about the vehicle not doing what it's supposed to do and having that feel like it's on their conscience. So until they've worked every kink out that they feel good, they've suspended any kind of live test program. Honda and Nissan, though, both came out and said they're going to go ahead and keep doing their thing. They don't feel like they've got a manslaughter machine.
Oh, wow.
Yeah. Uber,
good for them,
Uber
though,
had
right?
bad luck.
Bad luck.
It's gonna. How many people die in real vehicle
For sure,
accidents?
no. You kind of have to expect something like that. I hate to say it, but you kind of have to expect something like that to happen at first, introducing a new technology like this, especially on the road, driving itself.
It's got to be an anomaly, right? You have to chalk it up to it's a part of the R&D.
Yeah.
I mean, I know humans are involved. I understand that, but I mean, there's no way to get any kind of real world experience from this without real world experience.
That's
and it really is the next step in the way that we're going to be transported around.
Yeah.
We're not going to have, once the kinks are worked out, all the potential for human error go away, and the only potential is for technological error. And we've already got that potential now. Things can fail technologically on you now.
Right, yeah,
but we've got all that human error implemented in things too, which take into effect, you had too much Wendy's and had a nap, and you're not all there for things.
Yeah.
So in this, we take that out of it, and in the process, there's a few kinks. So watch where you're riding your bike. I don't know. I don't know what to tell you. But Uber suspends their program. They're probably not the ones to be doing it. This is probably a good way to get them out of it.
Yeah.
We want people on the higher end of this technology to be the ones doing this.
Yeah, they're kind of at the bottom, I would say.
I wouldn't put Uber in the upper echelon of who I want doing my autonomous vehicle testing.
No.
They've had enough problems.
Yes.
They can't seem to get anything straight over at Uber. This is not helping the IPO that I would imagine continues to get kicked down the road for infinity and beyond.
SoftBank that was going to invest in Uber?
SoftBank has invested in Uber. Yeah, they hold a pretty good.
If they're like, maybe we shouldn't have invested.
Maybe that's part of the reason that they decided to shut this down. Like I would imagine SoftBank has a lot of say now, so I could imagine that they probably are just sometimes it's time to throw in the towel, know what you're good at and know what you're not good at, and learn to work to your strengths and not spread yourself so thin.
Yeah.
Because Uber's already been having enough trouble continuing to spread themselves so thin.
Yeah.
Doesn't seem to be helping them. Broadcom and Qualcomm, it's off the table. The U.S. government said that it's just not. That's the competition they don't think is going to be there. So Broadcom is basically stepped away from this deal. Qualcomm continues to pursue NXP Semiconductors. Broadcom, though, shareholders 99% voted for their re-domicile to the United States from Singapore. They're just waiting on the High Court of Singapore to approve the move. So Broadcom will be moving from a Singapore-based company to a U.S.-based company, taking advantage of some tax breaks, doing a lot of business with companies inside the United States. That's going to take effect if it's approved on April 4th of this year. FedEx is adding 500 new locations, a pilot project already going on right now in a very small little window of the Walmart world. But FedEx will be adding 500 new locations into Walmarts around the United States over the next 2 years, allowing you to come to Walmart, do your shopping, be able to ship your packages or pick up your parcels from FedEx. So a nice little partnership there between two companies that are trying to grow, figure out all the different ways that they can take hold of things. You start talking about Amazon potentially getting into parcels themselves.
That's right,
This is a bit of a team up of companies worried about Amazon getting into parcels and being able to have that through Whole Foods and whatever other retail establishments Amazon gets into in the next couple of years. Talk on the late part of the week about Kroger and Target potentially merging. That talk was quelled a little bit going into the weekend, but I mean the talk is there as these companies need to find ways to compete with companies like Walmart and FedEx getting together, or Amazon.
For sure.
Those things are going to end up happening, and it's only a matter of time until we're going to see some of these big partnerships. So FedEx, 500 stores inside of Walmarts in the next 2 years. That's a big partnership. Steve Wynn couldn't keep his hands to himself. It is what it is. Has to sell and sold the remaining 8 million shares in Wynn Resorts. $1.4 billion for old Butterfingers. Can't be Mr. Busybody.
No, you can't.
A lot of people are not happy in 2017, 2018 about any kind of funny business.
Funny business.
Funny business has sunk a lot of ships.
Lately it has.
Best thing to do is to keep your opinion in your mouth and to keep your hands in your pockets.
Yes.
Or else you're selling the shares of the company you started 16 years ago. Steve wins, sells the remaining 8 million shares, and hopefully rides off into some sort of retirement sunset. He's an older guy already.
Yeah, I'd imagine.
Pays off whatever settlements this ends up turning into.
Yeah.
Civil court, and then goes away. BlackBerry partners with Microsoft, combining their cloud and productivity products with BlackBerry's mobility and security products. We know that obviously BlackBerry has a lot of inner working parts. They're also teaming up with Jaguar using their onboard system inside a new Jaguars, the new EV stuff for Jaguar. So BlackBerry still, people think BlackBerry's gone, and we've talked about this. They're going to be a strong company for a long time. They've changed their direction since that new CEO took over in 2013, was it? And that BlackBerry's really streamlined the way that company executes the things that they're really good at, and you can see it through the corporate partnerships they make. We've actually talked previously about how many corporate partnerships they made last year. This another big one here with Microsoft. So, I mean, it's really, and again with Jaguar this week too, really tough to deny that other big corporations see BlackBerry as an asset if they're working with them. So working in accordance with BlackBerry for the things BlackBerry does well, if you can remove yourself from thinking about the cell phone and what BlackBerry did in the cell phone business.
Because that's dead and gone.
They don't do that anymore.
No.
They run a very, very solid company at BlackBerry that is well utilized and immensely implemented across the board in so many different companies.
Yeah.
BlackBerry is going nowhere. Rest assured. Solid company, man.
Oh, definitely.
Does not get the coverage it deserves. And like I said, years from now, because it's not a mainstream media company, it's going to end up doing exponential. People will see, oh my God, it's been up this much, whatever it is. And people are going to say, is that a cell phone company? They don't even sell cell phones, do they? It's like, no. They completely changed that company around. It's a different, but because it's not interesting, what they do is such working part nuts and bolts of the insides of electrical processors. It's not. It's things you don't understand. Things that are so beyond the realm of what we understand because we're not educated in the specifics of that.
Yeah, it's not a material item. Like
it's not. Yeah, it's not that. It's the inner workings of that.
The software.
It's the thinking parts, and they're so good at what they do over at BlackBerry that be able to right this ship the way that they have. And to be able to stay so relevant on that corporate level where you see other corporations do not devalue what BlackBerry brings to the table still. And over time, it's been picking up. It's good stuff. It's Canadian tech. Come on. Canadian tech. I'm rooting for you. For BlackBerry.
Sure. BlackBerry.
You could be a serious turnaround story. 10, 15 years from now, we could be talking about a serious turnaround story from a company that looked like it was going into bankruptcy. So BlackBerry, I'm rooting for it. Bayer and Monsanto, obviously we're talking about the takeover. Bayer's trying to take over Monsanto. The EU has approved it. We've got approvals from Brazil and from a couple other places. We're waiting on approvals from the United States and from Russia. There's going to be some... they're going to have to do a few things, right? So they're going to have to change a few of the things that are out there. They're going to have to sell some seeds, some pesticides, some digital agriculture technology. Obviously, they're already doing some of that with BASF. We've talked about that in the past, that they're going to be selling that. There's going to be a little more, so they're going to have to make some concessions to appease regulators across the board. It's such a huge takeover between Bayer and Monsanto. These are massive companies that are going to be into one company. So there's going to be a little bit of that intellectual property that's going to have to be made publicly available for sale to really take some of the monopolization off of what could be Bayer and Monsanto together. Because, man, you want to talk Broadcom, Qualcomm being potentially a regulator issue. And, I mean, the regulators just snuffed that out. The U.S. might not let this go through still, even with the EU saying it's fine. Because these are, even with the BASF deal on the table that they're going to move some stuff to already, there might have to be some real concessions because these are two big companies that already, Monsanto especially, really dominate their marketplace. There is not a lot of wiggle room for companies that compete with that company. So we'll see. We will absolutely see, my friend.
Well, that wraps up headlines. Even though earnings season is done, we all know that we still have a couple to go over.
It's almost baseball season.
It is.
Yeah.
Right, yeah.
You know what I see a lot on the internet? A lot of Dodger fans. talking a lot of smack to the Giants.
Really?
Yeah, a lot of Dodger fans out there. A lot of Dodger fans running their trap.
Yeah.
We're gonna see.
We'll see.
We're gonna see as the boys of summer here. About spring training.
Boys of
We're
summer.
gonna find out. We're
Yeah.
gonna find out. My Giants are they're due.
I think they're gonna dominate.
They're due.
Yeah.
We had such a good, like 10 years ago. What a run, man. 6 years, 3 and 5 years. It's time for a bit of a resurgence. The Dodgers, they'll never win it all.
No.
Chokers. Bunch of chokers over in LA. Yeah.
Yeah.
No, it's good run. I like baseball. It's tough up here in Canada. Not a lot of people into baseball. When the Jays are doing good, people really like baseball. I've always been a baseball fan.
That's all really who we have.
You know, when I was 14, 13, I went to San Francisco, and they used to play. They play at is it Comerica Park now or Comcast Field, something like that. The Giants play somewhere. I've never been there. I'm from Edmonton. They used to play at Candlestick Stadium, Candlestick Park, whatever. I got to run the bases. They were on the road.
Oh, really?
And they actually had the grounds crew have the doors opened.
Yeah.
And my grandfather went up and asked. And I got videotape of me running Candlestick Park's bases in the summer during baseball season in an open, empty stadium. Like where the Giants play.
That's insane.
Like, could you imagine nowadays with the terrorism stuff? They wouldn't let you anywhere near that.
No.
I got to run the bases at Candlestick Park.
Yeah.
Yeah, I was already a Giants fan at that point in my life, so that just kind of reaffirmed that. They were actually on the road at that time in Los Angeles.
Yeah, that would have been such an experience.
It was pretty cool, man.
No doubt,
I definitely remember that. Yeah. Earnings.
Earnings.
You want to get into some earnings? Baseball season's coming, but earnings is always here. Oracle, 83 cents, beat the street by 11. $9.78 billion in revenue. That number was in line with the street. 5.5% revenue growth year over year, which is a trend. We're going to see rev growth over and over again with every company, even though these numbers don't seem to help them get a bump in the market because the market's just not loving this top. Oracle, though, another cloud-based company, really fighting for market share. Cloud revenue expected to grow 19 to 23% in this coming year, but still growing in relation to those other companies. That's really the problem, is that market share is getting gobbled up by some of the bigger ones. Oracle obviously was one of the first ones to market when it comes to cloud, but Oracle is not maintaining a stranglehold by any stretch of the imagination. 44.79 on the close on Friday, down from earnings. Alimentation Couche-Tard, that's how you say it, out of Laval, Quebec. They have over 15,000 stores around the world: Canada, U.S., Mexico, Japan. They've got Circle K on the run, Max. Obviously, Couche-Tard. 54 cents. That missed by 22 cents. This is a tax issue. 15.79 billion in revenue. That's a lot of revenue.
That's a lot of revenue.
15.79 billion when you're talking about a convenience store chain. They make a lot of money, right? And they don't get a lot of press, even though they're on almost every street corner in the world, in the Western world for sure. They beat the street by 170 million. That revenue number up 38.3% year over year. That is heavy revenue gains. 43.85 to close the week for Alimentation Couche-Tard, down on the revenue or on the earnings call. FedEx, $3.72 in earnings, beat the street by 61 cents. $16.5 billion in revenue. That beat the street by $350 million. That number is up 10% year over year. So we're seeing a trend. Revenue numbers up in the double digits, a lot of them year over year. That's not helping, again, the stock prices. $229.48 to close the week, down on the earnings. Even down on the news that they're going into Walmart.
That's right, yeah.
Going into 500 Walmarts can't help you, even though things are doing good. Operating margin fell to 6.4% from 7.4%. I could do better than that. Increased volume. Net income up 63%. Favorable fuel impact. Asia, though, accounts for 10% of all of FedEx's revenues. And with people considering that there may be all these tariffs, that becomes a bit of a weighty issue in regards to FedEx. Even though no analysts came out and really said they were, getting off of FedEx, they still thought FedEx was a good purchase, strong company. So Asia affects it, but doesn't affect it more than about 10%. And how much of that 10% is going to be affected when we find out that only 10% of the goods being tariffed are goods we're worried about buying. So we're talking about 90% not even being tariffed. How much does that really affect it? It could be really nominal. Still something to keep an eye on. General Mills, 79 cents, beat the street by one, 3.88 billion, beat by 100 million, 2.4% in revenue growth year over year. They cut the EPS and revenue forecast, citing sharp increase in freight and commodity costs. Freight's at a 20-year high, General Mills says. Grains, nuts, and dairy are killing them in the commodity costs. 44.21 to close the week, down exponentially on earnings. That earnings call with the forecast was brutal. They got thumped for blue chip. That should be an easy one. They got walloped. So like any bad news right now, you're getting served.
You are, yeah.
So like you got that knocked out of there like Dikembe Mutombo was in the paint with you. Like, don't come to my house, right? They're not playing. They're not playing with these bad earnings calls. The market is not having it. General Mills was down a lot. Guess 62 cents, beat by 8. $792 million in rev, beat by 36.5, up 17.5% this year. Retail brands, clothing brands, been doing good. Rapid growth in Europe and Asia. Guess was at $15 around the earnings call. They closed the week at $20.36. Up,
that's a good bump.
Yeah, it's like 30%
Yeah, that's a
plus,
good bump,
bro.
yeah.
That's a new 52-week high for Guess, and they had the biggest one-day gain in their 20-year history on the stock market. Guess having a pretty good day.
No doubt.
Pretty good earnings
No
call.
doubt.
It's good to see a lot of these retailers. The clothing's still doing good. Good clothes is good clothes.
Yeah, you need to actually go to a retail store and try stuff out because everybody's body type is different, right? So I think retail stores for like clothing and stuff like that, like a clothing chain, is probably going to stick around.
I have childbearing hips. You're preaching to the choir.
You do, yes, you do.
You're preaching to the choir.
They're beautiful.
Thank you.
You know,
Jeez, thank you. Darden Restaurants, that's home of the Olive Garden, Longhorn Steakhouse. Yeah, you're still hungry? How are you still hungry?
I'm not eating for the rest of the day.
You're going to get diabetes.
Exactly.
We're going to have to get you an
day,
insurance policy from Cardinal. 1.71 or $1.71 beat the street by 7 cents. 2.13 billion, missed by 10 million. 13.3% increase in revenue. 84.25 to close the week, down on earnings, even though Olive Garden had its highest sales total ever in December. That was in the quarter, and the 20th consecutive quarter of sales growth at Longhorn. Those are the two big franchises, and still couldn't win. No. Like, they beat on EPS by 7 cents. Like, I know they missed the revenue estimate by 10 million, which is nominal when you make 2.1 billion. That's a nominal number, and their revenue number is up 13.3. Like, market can't have it.
No, you can't.
Doesn't matter what you do. So, okay, Micron, $2.82, beat by 8 cents, $7.35 billion in revenue, beat by 70 million. That number up 58.1% year over year. Micron, Micron took on some other stuff that's going to up that revenue number, obviously, with a little bit of, there's been some extra, taking it on at Micron. They took on some extra company. 54.21 down on the year. DRAM industry supply growth estimated at 20% for the next year. Micron slightly below that, they estimate. NAND supply growth estimated about 45%. They look at themselves as somewhat above that. There is a lot of concerns that the DRAM and NAND supply is starting to get a lot more robust than it's been, obviously, where the supply lines have been pretty choked, and prices can be, you can basically name your price. You're one of these guys that are making this. You're Broadcom or Qualcomm or anybody else that's doing the semiconductor stuff on a high level. Supply levels are tight, and you can demand prices, and we're worried that supply levels are starting to pick up. And the Philadelphia semiconductor industry took a bit of a bump this week. Like, there was a pullback. People seen that and thought, does this reflect just on Micron, or is this going to go on throughout the whole industry? So people are starting to look. That's the main thing. Semiconductors, big run last year. This is going to start to even out as the next generation of stuff starts to come into play.
Right.
And you're obviously going to see a lot more supply. I mean, that just happens, right?
That's right.
You're going to ramp it up. You're going to start to get the manufacturing, the technology to do things at a faster rate.
That's true, yeah.
And that's going to happen as new technology starts to come out. But right now, this technology, it had its run last year. This year is going to be a lot more of a leveling out year, I think, for the semiconductor industry. We're not going to see near the gains that we saw last year. Some companies well over 30% up. KB Homes, 40 cents EPS, beat by 12. That's pretty good. Regional home builder, $871 million, missed by 2 million, 6.5% in revenue growth. Deliveries are flat at 2,223. Average selling price up 7% to $389.8 thousand. Net order value up 8% to $1.17 billion. Backlog order value up 10% to $1.97 billion, and that's up 4% in units to 4,972. The regional home builders are doing good. The top home builders, Toll Brothers and Pulte Group, everybody's doing good. It's doing well in the U.S., man.
It is.
Home prices are going up basically across almost every region you look at, and they're not going up crazy. We're not having this Toronto, Montreal, or Toronto, Vancouver thing up here that we had last year where prices were going up so exponentially it wasn't obviously, if you want to buy in the city of New York, you're going to be paying a ridiculous price. And there's neighborhoods in San Francisco and in Chicago and Miami where you're going to be paying, more per square. It's just going to be that way. But overall, when you look at home builders, they're able to raise their prices. Everything's going up, but everything's going up at a nice clip. It just goes to show that there's money out there that's going around. Not only do we look at the new home starts and the existing home sales, but all the quarterly earnings from the home builders say that that's where the money is, and that's your biggest purchase you're going to make.
It is.
Majority of people in your life, the biggest purchase you're going to make is your home. So when you see home sales are doing well, it's a good sign that things are doing really well.
That is,
yeah. It's one of the things I look at, man. Home sales is a big deal. It's the biggest purchase most people are going to make. It's tough to deny when things are good in that market space and consistent. That doesn't add an air of consistency to everything in the economy. Nike, the last one, 68 cents, beat the street by 15, $8.99 billion, beat the street by 140 million, up 6.6% year over year. We know Nike's having a bit of a rough year or so. 64-63, they're flat. I mean, they're losing market share on shoes in the U.S. to Adidas. They're losing market share in the sports apparel brand sector to Lululemon, to Adidas. They're having a tough go of it. Nike revenues up 4%. Converse revenues, which it might be time to start thinking about that brand scaling back a little bit, down 8%. Nike, though, having a boom in the Nike Air business, which is growing at higher than expected rates. They've got more Nike Air projects in the works. It is growing in North America and abroad and bringing Nike back and giving them some of that market share back that Adidas was taking away last year. So Adidas, the ball's in your court. You had a bit of a comeback for a short period of time. Nike's definitely firing back the best that they can. It looks like we're going to have a new 1-2 sort of a race. It used to be Nike and Reebok for the longest time.
Yes.
It's definitely going to be Nike and their European counterpart in Adidas fighting it out for shelf space at your local Dick's Sporting Goods or Sport Check or wherever it is that you buy. Foot Locker, wherever it is. Well, not the Nike store. No, they're not going to be putting no Adidas on the shelves of the Nike store. Sleepy. You're going to have to wake up. That's the end of this anyways.
That is, yes.
Episode number 22. You look exhausted. You look like you need more carbs.
No, I'm good.
You need sleep.
Get the podcast up.
You're going to have to do some work. Episode number 22. I had an excellent time.
Me too.
Yeah, steel tariffs and all sorts of trade wars live on pay-per-view. And
yes, I'm looking forward to that.
Companies getting into the gaming sector, Amazon, Microsoft, as we see video game sales continue to go up, hardware sales going up, accessory sales going up. Things are bustling out there in the markets, but I still wouldn't add any money to it. I would still I would play the sidelines. Yeah, if you're on the sidelines right now, this is a really good time to start testing your ability to guess. Practice. Use your intuition, use your foresight, and try to predict things. You're never going to be able to, but you only need to be about 55% right. So, the best thing to do now is to start seeing where you think things are going to go and how things play out. I wouldn't necessarily introduce money at this point. Just say it. Yes. If the money's not there, I wouldn't do it. I'm Cody from Wall Street Breakdown. It was a pleasure having this podcast with you, my birthday friend.
Thank you. It's always a pleasure having a podcast with you.
You're
Anthony from Wall Street Breakdown.
And you're how old?
33 today.
33 years old.
Yes. Old man.
You feel it in the hips, don't you?
Feeling the tricep right now.
Yeah,
really.
Yeah, I would imagine. Torn tricep. Mine's the hips.
Yeah.
Yeah. I'm almost 36. What a sad state of affairs. I promise I'm going to get younger as this podcast goes
of course.
on. I'm going to get the Benjamin Buttons or something and turn this franchise around. I'm Cody from Wall Street Breakdown. We thank you for being here. This was podcast number 22. If you've listened this long, you're probably sick in the head and probably sick of my voice. Go and have a little bit of alone time and ponder what you do with your life. Honestly.
Honestly.
Think this through. Check you later.